This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Number 26. Which of the errors will require an entry to the suspense account to correct them? And remember, we only need entry in the suspense account if the trial balance doesn't balance, if the debits don't equal the credits. If the debits equal the credits, suspense account isn't affected. But let's check each of these. Do debits equal credits or not? Number one. Let's read the bit. The trial balance failed to agree, suspense account was open for the difference. We don't keep receivables and payables ledger control accounts. The following errors are found in the accounting records. Number one. In recording an issue of shares at par, cash received of 333,000 was credited to share capital as 330,000. Well, you don't need to worry about whether we were debiting, crediting the correct accounts. Irrelevant. All that matters for suspense being affected is, does the debit equal the credit? And here it doesn't. It says we've received 333, presumably we've debited cash 333. We've credited somewhere with 330. The debit doesn't equal the credit, and therefore it will require an entry in the suspense account. So number one, yes. So the answer, there's a choice, the answer isn't D if you end up having to guess. It must be A, B or C. Anyway, number two. Cash of 2,800 for plant repairs was correctly accounted for in the cash book. So we paid cash, you would credit cash, but it's been credited to the plant asset account. Well, again, it's actually gone to the wrong account, but that's not relevant. What is relevant, we've credited cash, we should have debited somewhere. We've credited cash and we've credited somewhere. Debit doesn't equal credit. It will need an entry in the suspense. Number three, the petty cash book balance has been omitted, missed out from the trial balance. Well, I hope very clearly, if you miss out a balance, trial balance clearly won't balance. It will need an entry in suspense. And finally, number four, a cheque paid for the purchase of a motor car was debited to motor vehicles account. That's 87,400. So what's happened here? The credited cash debited motor vehicles account, but with two different amounts. The payment was for 78,400. Presumably that's what was entered in cash. We've debited an account with 87,400. We switch the figures. Debit doesn't equal credit. Trial balance won't balance. We will need an entry in suspense. 27. Which of the following is the correct accounting treatment for the claim in the financial statements for the year ended July X9? Prior to the financial year end, before the year end, we received a claim of 100,000 from a supplier for providing poor quality goods which have damaged the supplier's plant and equipment. Cannon's lawyers have stated there's a 20% chance that we'll successfully defend the claim. Make sure you've read this the right way around. They were trying to trick you with the percentage. Firstly, I hope clearly we have a contingent liability here, in that somebody's claimed 100,000, we might have to pay it, but as of our year end, it's not certain. Cameron's lawyers have stated there's a 20% chance we'll successfully defend the claim. Now that is where they're tricking you. There's a 20% chance that we'll defend and we won't have to pay, but therefore there's an 80% chance that we will have to pay. And you should have learnt your table for contingent liabilities. If there's an 80% probability that we're going to have to pay, then it's regarded as probable. And if it's probable, we will show it as owing. We will provide for the whole amount, obviously, 100,000. The answer is C. 20% chance will win, will defend. 80% chance will lose, that will pay. Number 28. Gareth, a sales tax registered trader, purchased a computer for use in his business. The invoice showed the following cost relating to the purchase, and I should have read first, but how much should we capitalise as a non-current asset? So how much do we show as a non-current asset? Let's run through. The computer, I think obviously yes. Extra memory, that's in a sense part of the computer. It's made the computer better, 95. Delivery, yes. It's everything to get the computer in a state ready to work for us. We have to pay for it to be delivered, to have it sat in our office. Installation, yes. Same idea. They need to deliver it and install it before we've got a fully working computer. Now it's ready to work. Maintenance, no. Presumably we're paying for a 1-year contract, but maintenance is like repairs, presumably every year. We're either going to carry on paying maintenance or we're going to pay for repairs separately. This is simply an expense of the first year. And of course, sales tax, no. That's not an expense. It simply reduces any sales tax that we need to pay to the state. And so the amount that will be capitalised, 5, 18, 19, 21, 2, 1, 0, 1, 5. The answer is D. That's how much will appear in the statement of financial position. 29. The following bank reconciliation has been prepared by a trainee accountant. What should the correct balance be per the cash book? Well, we assume always in this sort that the trainee has used the correct numbers. But what we need to check is have they added and subtracted correctly. So is the figure they get of 21,990, is that correct? If it isn't correct, then what is the correct figure? So let's rewrite it. There's an overdraft on the bank statement. What I always do is I put it in negative. We've got negative cash, it's a minus balance. There are unpresented cheques. Remember, unpresented cheques are always cheques we've written with paying, but they've not yet appeared on the bank statement. When they do appear, there'll be money going out. It reduces the cash at bank, or in this case, it increases the overdraft. Finally, outstanding lodgements. Well, again, this is money we've paid into the bank but hasn't yet appeared. When the money does appear in the bank statement, it will increase our balance or reduce our overdraft. So it adds on 16,690. And so what should the correct balance be? It was minus 3,860, minus 9,160 for the cheques to go through, add 16,690 for the money to appear. I end up with plus 3,670. And so the correct balance, 3,670, but a positive balance, a balance out to the bank, which is B. Question 30. Here, the conceptual framework, it really is a question of going back and just reading the list and learning them. But the chances of getting more than one or at most two of these is tiny. I hate them. But which of the following are examples of those characteristics? The conceptual framework for financial reporting identifies characteristics which make financial information faithfully represent what it purports, what it says that it's trying to represent. Well, the characteristics to make it faithfully represent are, I'm sorry, it is just the list. It's number 2, completeness, and number 4, neutrality. The answer is B. Okay, number 31. What should the closing balance of be when all the errors made in preparing a receivables ledger control account have been corrected? You've got there a receivables ledger control. It's been prepared by a trainee accountant. And so our job is to go through and we assume that all the numbers are correct, but have they been put on the right side? You know, should it be a debit, should it be a credit, and so on. We need to check the control account and see what the closing balance should be. They've got 396,800. Well, it's none of the choices, so clearly there are mistakes somewhere. And by far the best way of doing these, as I've said I don't know how many times, sure they're working any way you want, but the best way is simply to rewrite the account. Rewrite it, go through the figures one by one and make sure they're in the right place. Let me go down the debit side first. Opening balance. It's receivables, an asset. That's correct. It should be a debit balance. So that's right. 308,600. Credit sales. Credit sales, sales on credit. Is that right? Well, when we sell on credit, we debit receivables, we credit sales. That's fine. So sales on credit. 154,200. And of course, in the exam, don't be writing all these descriptions down. It's wasting time. Cash sales, they shouldn't be there at all. Sales for cash, debit cash, credit sales. It shouldn't appear in the receivables account at all. Contras always reduce receivables, reduce payables. Well, if it reduces receivables, it should be on the credit side, not the debit. Let's go down the credit side now. Cash, 147,200. Is that correct? When you receive cash from customers, debit cash, credit receivable, that's fine. 147,200. Discounts allowed. Two things here. First of all, should it be there at all? Well, discounts allowed. We give discounts to customers, so it should be here. And when we give a discount, it reduces what they owe us. And so, yes, we will credit with 1,400. Interest charged on overdue accounts. If customers are late paying, we're going to charge them interest, which means they'll owe us more. Well, if they owe us more, surely we should debit receivables with the interest of 2,400. Irrecoverable debts. If a debt's irrecoverable, we remove it from receivables. So credit receivables, that's fine. Debit the expense. And finally, allowance for receivables. Well, no, the allowance is for any doubtful debts. If they're doubtful, we still leave the receivable there. the allowance is created in a separate account. So that shouldn't be there. And now we've got it all. And so let's work out what the correct balance should be. The debit side adds up to £465,200. The missing figure £307,100. So there's the correct balance. The correct answer, therefore, is D. Which was at 3132. Which of the following material events happening after the reporting date and before the financial statements are approved are adjusting events? Now, we're only concerned with material, with big things, but it's events, things we've discovered since the date we're producing the accounts for, but before they're finally approved, so we are still able to change figures. The question is, are we going to adjust them and change them or not? 1. A valuation of property providing evidence of impairment in value at the reporting date. Yes. Yes, if we find out that the value at the reporting date needs to be reduced, well, if it needs to reduce at the date we're still able to change it. We will adjust. Number 2, sale of inventory held at the reporting date for less than cost. You could argue about this one, but sadly for the exam, we should always value inventory at the lower of cost and net realisable value. If it was sold after the date for less than cost, we'll assume that it's because it was damaged, obsolete, whatever, and it already was at the date of the reporting date. And therefore, you'd normally value at cost, but here, if it's sold for less, you will adjust your value to the lower amount. Number 3, discovery of an error or fraud affecting the financial statements, of course. 4, the insolvency of a customer with a debt owing at the reporting date which is still outstanding. We have to ask ourselves, if we'd known at the date of the accounts that the customer was going to go insolvent, was going to go bankrupt, would we do anything? Of course we would. We'd remove it as irrecoverable, not at the very least doubtful. You will adjust. So it's all 4. The answer is B. 32. What is the value of the company's closing inventory of engines at 30th of April X6? A company values its inventory using the FIFO method, first in, first out. At 1st of May, they had 700 engines in inventory valued at 190. During the year, the following transactions took place. Well, if it's FIFO, 2 steps. First of all, just look at units. How many are left at the end? So we started with 700, the 1st of May. During the year, well, July we bought 500. November we sold 400. February we bought 300. April we sold 250. And so forgetting the value for the moment, how many did we have at the end of the year? How embarrassing. 1,200, 800, 1,100, 900, 850. So that's how many we've got left at the end. How are we going to value them? If it's FIFO, we always assume that the ones left at the end are the most recent purchases. So our year ends April X6. If you go backwards, the most recent purchase was on the 1st of February. We bought 300 and they cost 230 each. I'll multiply up afterwards. However, that's not enough. We've 850 left. So what about the other 550? Go back to the purchase before. The purchase before was 1st of July, the previous year. We bought 500. They cost 220. They'll be valued at 220. I'll multiply afterwards. That's 800, but of course we've still not enough. We've actually got 850. What about the previous 50? Well, they must have been part of what was in inventory at the start of the year, 1st of May last year. And what would they have cost? They were valued, those at the start of the year, at 190. And now it's simply multiplying up. 300 are valued at 230, sorry, 69,000. 500 are valued at 220, which is 110,000. 50 are valued at 190, which is 9,500. And so the total value £188,500. Is that one of the choices? Yes, it is. The answer is A. All right, 2 left, 34. What is Amy's profit for the year ended December X8? Amy's a sole trader. She had assets of 569,400 and liabilities of 412,840 on the 1st of January X8. During the year ended December X8, she paid 65,000 capital into the business. She paid herself wages of 800 a month. And at December, at the end of the year, she had assets of 614,130 and liabilities of 369,770. I don't know if you remember, but one of the very first questions, in fact the first or second I think, was testing on the accounting equation. And here we are again, except this time, and we need to put numbers in it. Your accounting equation, the increase in net assets over the year is equal to the profit plus any capital introduced minus any drawings. So let's get the figures. First of all, the increase in net assets. Well, the closing net assets. And so at the end of the year, net assets minus liabilities. The assets at the end of the year are 614,130. The liabilities 369,770. And so net assets at the end of the year are 244,360. The opening net assets, the net assets at the beginning of the year, 1st of January, the assets were 569,400, the liabilities 412,840, and so the net assets at the start £156,560, and therefore the increase 87,800. I better just check. 244,360 minus 156,560. Yeah, 87,800. Oh, now I can fill the equation in. Increase in net assets 87,800 equals the profit, which is what we're after, plus the capital introduced, Well, during the year she paid 65,000 into the business. Minus any drawings. Well, she's paid herself wages, 800 a month. Remember, anything to the owner is drawings. Doesn't matter whether she calls it wages or whatever. And secondly, remember, it's 800 a month. And so over a year, 9,600. So it's then just being efficient. 87,800. If you can write the answer straight down, do. But is the profit plus 65,000 minus 9,600? 55,400. And therefore the profit, subtracting 55,400 from both sides, the profit is 32,400. Is it? Yes. It is one of the choices. The answer is A. Quite frankly, you shouldn't need to write all those lines down. But it's a question of speed again. All right, last one on section A, question 35. Which of the following could explain the imbalance? And what does it say? Bumbley extracted the trial balance for the year ended December X7. The total of the debits exceeded was higher than the total of the credits by 300. Which of the following could explain that? Because trial balance, of course, should balance. A. Sales of 300 were missed out of the sales day book. Well, although that's a mistake and would mean the total of the sales day book was wrong, remember, we had something similar earlier in this test, that we take the total from the sales day book, and with the total, we debit receivables, we credit sales. So even if the total's wrong, we're still debiting, crediting with the same amount. The trial balance would still balance. So it's not A. Next one. Returns inwards, so returns to us from customers, were extracted to the debit column of the trial balance. What column should they be in? If customers return to us, it's the opposite of sales. Sales, you debit receivables, credit sales. If a customer returns goods, you credit receivables and debit either returns inwards, or you could debit sales, but debit returns inwards. So that's fine. No problem. That's not going to cause an error. That's not explaining the imbalance. C. Discounts received were extracted to the debit column of the trial balance. Let's think the same way about them. What happens when we receive a discount from suppliers? And so suppliers, we owe money on payables. When we receive a discount, we debit payables because we owe them less, and we credit discounts received. And so discounts received are a credit. We should have listed this as a credit instead of a debit. And you see, we should have a credit of 150. We haven't got a credit of 150, so that makes 150 difference. We've got a debit of 150, which makes another 150 difference. It means the credits are too low, the debits are too high, both by 150. It'll mean overall the total debits are 300 more than the credits. There's our answer, but let's still just make sure about D. The bank ledger account did not agree with the bank statement by a debit of 300. Well, we can't really do anything about that. And the bank T account won't agree with the bank statement. most of the time, because of unpresented cheques and lodgements not credited. So the fact it doesn't agree with the bank statement by 300, we can't say whether there's an error or not an error. That's rather irrelevant. The answer is C. And there we are. There's section A. We'll have a look at section B separately.